I'm not saying that's the case now. These markets may go on forever. Maybe we finally found nirvana. But I'll tell you, my view of whatever it's worth, I think one has to think very carefully about what you think the risks are, what you think the rewards are, and try to make reasonable judgments. And I'm not predicting in any way what the markets are going to do. I'm just going to say that I think that the risks are enormous, and I think, I guess I do think, that's not I guess, I do think that the markets don't properly weight those.
So let's talk about some of the specific risks. People, when the tariffs were announced on Liberation Day, April 2nd, there was this feeling that business would collapse.
It wasn't my view, but go ahead.
Well, why has the market been so surprised? Why have companies been so surprised themselves? CEOs I talk to say, we've been shocked that things kind of keep going.
Yeah, people, Lisa, they may keep, I think the tariffs were extremely unwise. I think open trade has served our country extremely well over many, 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 many decades. I do think there's some caveats to that. I do think you need to protect supply chains when they have national security or economic security dimensions through subsidies or trade restrictions. But having said that, beyond that, I think open trade has served us extremely well. I think tariffs will hurt us in terms of growth, and I think it's a one-time increase in cost. It's not in that sense, it's not inflation, but it is a one-time increase in cost. Cost to our producers will go up. That decreases their efficiency and competitiveness. It could lead, I've never forgotten something Paul Volcker said to me. He said that inflation can take on a life of its own, and of course that was a reference to inflationary expectations. Maybe and maybe not, the tariffs could create a set of inflationary expectations, and it could lead to inflation. But whether it does or it doesn't, it almost surely will adversely affect growth. But I for one, never thought it was going to have an immediate impact. But I thought the risk was over time, and I still think that's the risk. And if you speak to CEOs, and in our firm we do a lot of that. We have an immense business dealing with basically large corporate America. I think most CEOs, virtually all CEOs, think they're going to be passing on a lot of this in terms of prices. So cost to consumers will go up, and cost to producers who are importing, in components will be going up.
What's fascinating is when the tariffs were announced, people thought that it would be really bond negative because inflation would go up and you would see sort of this stagflation-like kind of environment. And so bonds would be in a sort of quagmire, as would the Fed, as would the rest of policymakers. Instead, tariffs are now treated as a positive because they are a revenue boost that will offset any deficit spending. I can tell you agree with that. So I'm wondering.
I only disagree with it because it's wrong, but go ahead.
Well, so I'm just curious, where this is getting misunderstood.
Well, the Yale Budget Lab, which is terrifically reliable and sensible about the fiscal matters, I asked her the other day, the one who runs it, Tasha Sarin, who's a tenured professor at Yale and terrific, also a PhD in economics. She told me that she thinks that revenues will be about maybe 280 billion a year, or some number like that, and that's before the adverse effects on growth and retaliation. When you take it all into account, maybe 200. It's a very small fraction of our deficits. This is not going to be a fiscal response, and you're paying a price for it in terms of, as I said a moment ago, risk to growth, and at least I think certainly higher cost to consumers and to producers, and possibly triggering inflationary expectations. Look, what is it? The tariff is, assuming that it gets passed on, which if you talk to our clients, I think virtually all this is going to get passed on over time. It's a regressive tax. And it's a regressive tax which has adverse effects on growth, and as I say a moment ago, on inflation.
So I'm trying to pair this with the idea that we're seeing mergers and acquisitions accelerate. We hear a growing number of companies talk about, and corporate executives, a reacceleration in the consumer.
Yep.
How do these two things go together?
I don't think it's complicated. When I was at Goldman Sachs, we had economists and we had terrific people, strategists and everything. They would always tell me what they thought was going to happen in the short term. And I would always say, you're very nice people, and I think that's nice for you to do. And our clients are interested, so you should do that. But I myself wouldn't base my decisions on them. Things, short-term effects, Lisa, can be whatever they're going to be. The question is what's going to happen over time. And I think over time, for the reasons I've said, I think tariffs are a very substantial negative, and I think that open trade has served, with the caveats that I mentioned, I think open trade has served us very well.
How much are companies rethinking their U.S. footprint in a new kind of way?
Well, my impression, and I get this largely from speaking, I don't speak to many companies myself, but our people are just enormously plugged into corporate America. And I also have 3 advisory relationships with pretty substantial investment I guess you call them funds. I think a lot of people are rethinking how much they want to be allocated to the United States. And you see it a little bit, by the way, in the dollar. The dollar has, after all, suffered through this thing. I don't think too much of it has happened so far, but I think it's a risk that we're taking. And I think what's so sad to me, Lisa, is we have such tremendous strengths and so many advantages. And I think the damage we're doing is very substantial, attacking our research, attacking science and basic research, attacking our universities, immigration policy that makes no sense whatsoever. We should have economic, or let's put differently, we should have immigration that serves our economic needs, and then we should have, at least in my opinion, measures to deal with the currently undocumented people so they can become, who are part of our economy, and if they're obviously doing adverse things or criminal things, that's a different matter. They can continue to prosper in our economy and eventually become citizens. There's so much that we can do, but we're doing the opposite of all these things.
There is this feeling, and we're seeing this in the political sphere, and as someone who was in the Clinton administration when globalization was really taking off, I'm wondering what your perspective is on how the story of globalization is being told now, and that a lot of people are saying there were a lot of people left behind, and that there are some things that need to be done to remedy that.
I totally agree with that. When President Clinton announced NAFTA in the East Room, I totally agree with that, Lisa. One of the things but I think the wrong conclusion is therefore let's not open trading markets. I think the right conclusion is let's do what President Clinton talked about when he announced NAFTA, but that we never were able to do politically. We lost control of the Congress and we lost the ability to do it. And that is have in place retraining, social safety nets, a greatly increased earned income tax credit so that people with low incomes will have higher incomes, and have all of that to deal with job losses. And as much as that is a problem with respect to trade, AI, in my opinion, and you all have your own views, so you probably know a heck of a lot more about it than I do, but as I say, I've been taking tutorial for the last 2 years, twice a week, so I kind of know something about it. I think that the potential for job losses is very substantial. And so as much as we needed that kind of an adjustment set of programs to deal with trade, and we did need that, Lisa, absolutely, and we don't have it, I think we're going to need even more to deal with AI.
Which is something that we're not hearing as much about as a lot of people think that
Lisa, it's not part of the political dialogue, and it should be. Look, our political system is in terrible shape, and that's not a partisan comment, though I do think Trump is doing just immense damage to our country with his economic policies and his actions. But in neither party are we talking about a lot of what we need to talk about. And one of the things we need to do is to do exactly what I just said, but there's no political ability to get, not a lot of political focus on it, and really no political ability to get it done.
Given the footprint that you have and the access to companies, do you have a sense of how much they plan to reduce their staff, or whether they are not necessarily hiring recent college graduates as a result of their using
I get
AI?
the question. I don't have much wisdom on that. I've asked our people that too. I mean, clearly the labor market has softened. There's no question about that. I'll give you my personal opinion, whatever it's worth, but it's really mostly based on just what I think about AI. I think AI has the potential for tremendous positives in terms of productivity, which, by the way, could be partially responsive, albeit not fully responsive, to our fiscal trajectory. And our fiscal trajectory on multiple bases, it seems to me, is a tremendous risk to our economy over time. So this could be partly responsive to that, and productivity, increased growth, increased revenues, and so forth. But I think a lot of, I do think it's going to have very substantial job displacement effects. A lot of things that are being done now by people are going to be done by AI. And AI, as you know, what is the human mind? The human mind is neural systems, right? What is AI? AI is neural systems. And if you take AI and you pursue it, and some of you know much more about this than I do, but you build bigger and bigger data centers and more capacity, you create neural systems that are able to do not only the more mundane tasks, Lisa, but many of the kinds of complex thinking that we're accustomed to associating with human beings. And that is, as you know, is sort of the question of AGI. And admittedly, you can define AGI a lot of different ways. I get that, but however you want to define it, I don't need any question that AI is moving, at least in my opinion, I may be wrong, but I don't think I'm wrong, moving very quickly toward ever more sophisticated capabilities that can more and more replicate the neural processes of the human mind.
Which is the reason why when you talk to some Fed officials on and off the record, more off the record, they will talk about running the economy hot or prioritizing the labor market as a way to ameliorate some of the potential job losses from AI because it encourages companies to invest more in their workers and keeps people employed so people won't be left behind as much. I mean, do you buy into that kind of idea and sort of endorse the idea of having a more accommodative monetary policy at a time like this?
Yeah, I get the point, and this is a good debate. This is the kind of things that if you have sensible people sitting in a room, you can really discuss in very interesting ways. No, I actually don't agree with Lisa. I'm much more concerned about the possibility of inflation. And if you run the economy too hot and you get higher rate of inflation, and that in turn has a weaker dollar and it has higher interest rates, I think that can have a lot more adverse effect than the benefit you're getting from Fed funds rates being lower and whatever you think might contribute. So you might actually accomplish the opposite of what you wish. So I know if I were at the Fed, look, nobody's going to ask me what I think at the Fed, I promise you, but if anybody did, I think I would say to them, you've got a dual mandate under Humphrey Hawkins, as we all know, and I would worry more about the inflationary side of that than I would. I'd worry about both, but I'd be quite concerned about inflation.
One thing, Ray Dalio was speaking earlier, and he drew the parallel to the 1970s as well as the 1930s, which is a little bit even more alarming. I'm just wondering, from your perspective, do you think that the 1970s style inflation is the correct analog?
Well, 1970s are an interesting time, and that's actually what Paul Volcker was talking about when he and I were talking about this. You know, I don't know, probably not many of you here, well, maybe none of you actually, lived through the 1970s. I did. And inflation took on a life of its own, Lisa. And inflation, this was Paul's point, inflation expectations built on themselves, and once that happens, it's very, very hard to deal with. And Paul's point was, and I think he's right about this, that once inflation gets going, inflation expectations are very, very difficult to deal with. That's why if I were the Fed, I'd be focused on both aspects of my dual mandate, Humphrey Hawkins, but I would be quite concerned with not allowing inflation to move in a way that is threatening.
We spoke a bit ago, and you said the U.S. is still the best place to invest. Do you still feel that?
Yes, I do, but it's complicated. We have such I really am troubled about, trouble is the wrong word. It is tragic what we're doing to ourselves and what this administration is doing on so many dimensions, in my opinion, in terms of public policy, because I think we have enormous strengths compared to others. I'm repeating myself, and I know that. We have flexible labor and capital markets. We have a dynamic culture. We have capital markets that are unrivaled any place else in the world. We have great universities, though now we're attacking them in ways that are hugely counterproductive, in my opinion, and so much else going on, natural resources. We have so much else going our way. But we are doing a lot of damage. Yes, I would still invest here, because I think, look, I think ultimately it's going to depend what happens to our political system, and I think sooner or later we'll come back. I hope is the wrong word. I think the odds are we will come back at some point to the historical system that we've had. We have a conservative party, sort of Ronald Reagan is a historical conservative. You have a progressive or liberal Democratic party, whatever you want to call it, center or left, I don't care. And then they have the debates, and we're back where we used to be. It won't be the same. It will not be the same. But it'll be some analog to that. So I believe that's the most likely outcome. And China has China has some great strengths, we all know that. But it also has enormous problems, we also all know. And Europe, from 2019 to 2022, productivity in Europe grew 0.4%. Productivity in the United States grew 6%. And the Mario Draghi report, which was designed to deal, I was with Mario the other day, we spent an hour together just talking about this, because he was in New York and we got together. It was designed to address the productivity problems in Europe. They've done virtually nothing on it. So yeah, I'd still bet on us, but I think I'd still bet on us. I'd still rather be here. I am here in terms of my own personal resources, but I think what we're doing to ourselves is very seriously troubling.
There's a lot of question around gold and the fact that a lot of people are going into it and whether this is sort of a signal of something with the debasement of the dollar or of people's state of mind.
Yeah, I know.
What's the message? What's the signal from gold?
I don't have the foggiest notion. Look, gold has always been this sort of so-called refuge from the dollar. I shouldn't mean the dollar, I mean from uncertainty. And, it's had thousands of years of history of that. Is the current action of gold a signal of something? I have not the foggiest notion. I personally wouldn't own it, but that's just because gold has no use value. It's only a psychological But look, I'm not demeaning it. It's for thousands of years. It's been a psychological refuge from uncertainty. But I don't know if I wouldn't call it. I mean, I think one can think rationally and thoughtfully about all these things. I personally wouldn't weigh the price of gold in my thinking about what the odds are.